I don't think people understand this. I think the 7% plus is conservative, but it's nothing that anyone living today has seen before.
Ever since Cathie Wood, the founder and CIO of ARK Invest, predicted Bitcoin reaching $1.5 million by 2030, she hasn't wavered. Her conviction hasn't just stayed strong, it's deepened. But now, with the geopolitical tension rising in Iran and beyond, another dynamic is entering the picture. Bitcoin thrives in entropy, in uncertainty, because when governments are pushed to spend and print money to meet the demands of war and economic strain, fiat weakens and scarcity assets emerge as alternatives. From my perspective, not Cathie's, if this conflict continues, Bitcoin could break $100,000 before the end of March. Cathie often points out a generational shift that's shaping this cycle. Younger generations think differently about money. They want assets that are permissionless, borderless, and serve as real digital gold as Bitcoin matures toward 2030. This adoption is not just growing, it's accelerating. More and more, freedom-minded investors see Bitcoin as something they can move and hold on their own terms. In previous cycles, gold tended to lead Bitcoin, but this time, it's different. Bitcoin has decoupled, tightening into a coil, gathering energy, ready for its next major upward movement. So buckle up. Cathie Wood's bullish thesis hasn't faded, and with macro forces aligned, the world may be about to witness Bitcoin's next explosive chapter. Let's dive deeper with more of her insights.
We have not moved off that. That's our bull case, 1.5 million in 2030. There are a few compositional changes. One, stablecoins, so especially Tether in the emerging markets, have usurped one of the roles that we thought Bitcoin would serve. And that is, we thought that before stablecoins that people would, and they would buy Bitcoin as an insurance policy against confiscation of wealth, either in the form of inflation, hyperinflation, and massive devaluations, which occur regularly in the emerging markets, or outright confiscation of wealth. And so stablecoins now serve that purpose. Stablecoins are backed effectively by the U.S. dollar, and therefore are hostage to our fiat monetary system. So that would have taken our price target down by $200,000 to $300,000. On the other side, what has happened to gold recently? Gold has doubled over the last 2 years. And has outperformed Bitcoin royally in the last year. So the digital gold role, and we think with intergenerational wealth transfers accelerating here throughout the world, that the younger generation will diversify into a digital gold option rather than the physical gold. It's more their world. And so we think that role has increased, or that the price should be supported by what has happened to gold. Now, if you look at a correlation matrix between 20 and 25, the correlation between Bitcoin and gold has been almost non-existent, 0.14. And so, but if you look at what's happened historically, certainly the last two cycles, gold has led Bitcoin. So we think Bitcoin is getting ready for another big run. What has happened in the last few months is 10/10. So October 10th was the flash crash caused by a software glitch at Binance. And it got a lot of highly leveraged either speculators or investors way off sides. There was an automatic deleveraging that took place. About $28 billion worth of being off sides. And we're hearing that is pretty much cleared out. So we have very high hopes for Bitcoin. And talking to the team, we had a number of people on the Bitcoin brainstorm yesterday. our thinking is, okay, stablecoins are they're serving a humanitarian purpose, this insurance policy backed by the dollar. But and consider this is the Bitcoin crowd. They believe, and I do too, that Bitcoin. That its cause is freedom, financial freedom from all, government oversight and so forth, and from censorship and seizure and all sorts of things. As emerging markets' wealth grows, and we think this is a global phenomenon with all these technologies, they will move towards, from a savings point of view, right now they're hand to mouth for the most part, but from a savings point of view, they will move into Bitcoin.
Like El Salvador. I mean, Bitcoin was always viewed as the counter to the inflationary pressures of the dollar. That as the world becomes more unstable with wars, inflation increases, post-COVID, more money is printed, that people would flock to Bitcoin to sustain wealth versus having it inflated away. And I don't think we've actually seen that. Do you?
Well, I know that if you look at from the bottom of the bear markets, equity and crypto in late 22, Bitcoin has gone up, I think it's roughly 360%. So definitely one of the reasons was the inflation back then and fears that the Fed would not get it under control. So I think it has played the role. The question I get a lot is, wait a minute, you're expecting not inflation, but deflation. Doesn't that take away an important role that you think Bitcoin's going to play? And our answer there is, yes, Bitcoin is a hedge against inflation. It's mathematically metered to top out at 21 million. It's going up 0.8% per year right now, which will drop to 0.4%. Its supply is now rising more slowly than gold's supply, because gold miners can just go out and, they can respond to this price signal. So their mining has picked up. But what about the deflation side? Well, if you think about 0809, which was the catastrophic deflation, threatened a global financial bust, introducing all kinds of counterparty risk. Bitcoin is a hedge against that. If you self-custody Bitcoin, you're not subject to any counterparty risk. It's yours, and it's in your wallet. So we think it's got plays a very important role in both, and especially if we're right on how disruptive the world is going to be, disrupted by these 5 innovation platforms, 15 different technologies that are converging, then there's going to be a lot of chaos in the traditional world order, and there's probably going to be a lot more bankruptcies out there than many people expect.
So what should we make of Cathie Wood's bold forecast? $1.5 million Bitcoin by 2030. It's not a random number. It's rooted in how she and ARK Investment Management model the future. Increasing digital adoption, programmable money, AI, robotics, mitomics sequencing, and decentralized finance all reshaping value and capital flows. Cathie sees Bitcoin not just as digital gold, but as the monetary foundation of a new global tech era. As we embrace artificial intelligence, biotech like mitomics sequencing, digital currency rails, and autonomous systems, assets that are scarce, decentralized, and globally accessible become more valuable. And that's Bitcoin's sweet spot. But is $1.5 million Bitcoin realistic by 2030? If broader adoption continues, institutions join the network effect, and governments innovate around digital money rather than suppress it, the answer could be yes. We're witnessing part of the world's tech and digital journey, a transition from analog money to digital scarcity. If you enjoyed today's breakdown, like, comment, and share, and subscribe for more Bitcoin and crypto market updates. Thanks for watching. Let me know what you think about Cathie's forecast and where Bitcoin is heading.